I hope you can hear me. We're sorry for starting a bit late, but we're here. Thank you so much for joining us this morning. Thank you. Good morning, good afternoon, good evening, wherever you are joining us from. Thank you for joining us. So today is another edition of the real estate webinar. Thank you for joining us last month when we talk about trust in real estate, and we said it matters more than ever before. So today is another edition, and so we just want to go into it. Just give me a moment. Okay, so you're welcome to another edition of Real Estate Webinar on navigating Nigerian new tax law, a deep dive into the real estate implications. Tax is everybody's business. So you want to understand maybe for yourself, for your business, or for your establishment. And my name is Mojisola Ogunkoya. I'll be your moderator today. And so before we go on, we just have a bit of housekeeping. So thank you for joining so early, but I will want you to tell your friend, tell your colleague that tax is everybody's business, so they should try and join us now. So as Ubosele and Co, what is our vision? Why do we do what we do? Why do we exist? Our vision is to develop a professional real estate consultancy practice run by a highly resourceful team who are committed to excellence, integrity, customer partnership, and professionalism in a way that is rewarding to all our stakeholders. So that is one of the reasons why we exist. And our mission is to be the reference firm in real estate consultancy sector in Nigeria and Africa through proactive and creative delivery of our solutions to our clients. And today, we invite you to, we invite you to be part of our vision and mission. And how do we become part of our mission? We want to deliver creative, client-focused real estate solutions while setting the benchmark for professionalism in Africa and beyond. What is our focus area? Real estate is wide, but we do our services by delivering excellence. Ubosele & Co deliver end-to-end real estate solution agency, property and facility management, property inventory and audits, valuation of property, advisory services, mediation. We do a lot, and that's why you see the ETC, helping clients to secure deals, protect their assets, and make confident investment decisions across Nigeria and beyond. And we've been around for like 35 years in Nigerian economy and beyond. And so this year we started the webinar in January. Like, we've been doing webinar year to year, but in January I just want to run us through the topics, because this edition is kind of the last edition for this year, because we don't want to disturb you. We know it's festive period, so December we want you to just enjoy yourself. So just in case you are joining for the first time, you can go to our YouTube page to really get all of this topic. And that's one of the reasons why we want to just tell us and say, oh, these are the topics that we have done up to this moment. So in January, we talked about the 2025 budget and the real estate sector. And our speaker was one of our principal partner, Mr. Emeka Ele. In February, we talked about the economics of green building in Nigeria by Dr. Tenibade Udoh. And in March, we talked about property ownership, the importance of title documents by Barrister Folarin Oloyede. And in April, the role of valuation in securing bank loan and risk assessment by Mr. Moses Adetayo. And in May, we talk about property development and finance in Nigeria, unlocking capital and structuring sustainable projects by architect Samuel Baye. In June, we talk about facility management reimagine from expenses line to strategy value driver by Mr. Ikechukwu Uwoji. And in July, we talk about how to prepare your house or property for sale and attract the most buyer by my humble self, Mojisola Ogunkoya. And in August, we talked about building wealth through real estate and entrepreneurial playbook. And it was we were honored by the FIAFCI Nigeria chapter president, Mr. Akin Opatola. And in September, I will talk about the acts of property management, mastering the tenant relation and maintenance by the CEO of Good Tenant, Mr. Adekunle Jenadu. And last month, it was wow, when we had Professor Timothy Nubi talking about building trust in real estate, why ethics and professionalism matter now more than ever. So he took us to so if you have missed any of this edition, please go to our YouTube page to really watch them, or reach out to us to tell us that maybe you need the slide or the recording. So today we are going to another important topic. This topic is, important to everyone more than ever before. People want to know, if you want to deduct my money, where is the money going to? Why are you deducting my money? So tax is every Nigerian's business. So today we are talking about, like I said, navigating Nigerians' new tax law, a deep dive into the real estate implication. The real estate sector is vital to Nigeria economy, yes, and recent tax changes carried important implication for investors, developer, for an employer and employers, all other stakeholders. We are honored to have Mr. Christopher S.N. Udoh, an expert who will guide us through this reform, highlighting practical insight and strategy to navigate the evolving landscape as it relates to real estate sector. I encourage you, please, to be an active participant. I encourage you to ask questions. I encourage you to, these tasks, I'm saying that everybody is still learning it, so you might have contribution in other areas during the question session. Please don't be in a hurry to go and make the most of this opportunity to gain clarity on this important development. So without wasting our time, let me just read a brief profile of our guest speaker. So Mr. Christopher Essen. Christopher Essen is a highly accomplished tax professional and a senior manager tax with Federal Inland Revenue Service, now Nigerian Revenue Service. He brings over 15 years of extensive experience in tax administration across broad spectrum of economic sectors, including corporate taxation, individual taxation, and taxation of non-residents. Before joining the FIRS, Christopher built a solid foundation in the banking sector, where he worked for several years. His time in financial industry enriched his understanding of financial system, regulations, framework, and sector-specific tax implication knowledge that continue to enhance his effectiveness in tax administration and policy implication. Currently, Christopher served as a team lead in the large tax audit, telecom, and broadcast office of FIRS, where he oversees highly profiled audit, ensure compliance with tax regulation, and provide strategic guidance on complex tax matters. His expertise spans both domestic and international taxation, making him a trusted advisor to government institutions and corporate sector stakeholders alike. Christopher is also a distinguished member, yes, of a professional tax and accounting community. He is a fellow of the Institute of Chartered Accountants of Nigeria, FCA, and a fellow of Chartered Institute of Taxation of Nigeria, reflecting his commitment to excellence, integrity, and professionalism in the field of tax. His work has not only contributed to strengthening tax administration and compliance in Nigeria, but also to advancing best practice in tax audit and advisory services. So thank you so much. So the next voice that you're going to hear is going to be that of our speaker, Mr. Christopher Udoh. Please, like I said, please invite your friend, invite your colleagues, let them come and learn and also make contribution. Thank you so much. Mr. Chris.
Yeah, I'm with you.
Okay.
Trying to share my screen. Can you see my screen?
Yes, we can. Thank you.
All right. So thank you so much, Moji. While we were reading that profile, I was asking, who are you talking about? As if you know me more than I know myself. It's all right. Please, our participants, want to thank you for joining this call. Our sincere apologies for the late takeoff. Sincerely, I have planned over an hour ready for this presentation, but sometimes, no matter how you plan, the unforeseen happen, and that's exactly what happened today. So my sincere apologies for taking off this webinar late. I'll try as much as possible to be fast about it so that I won't waste your time. Like you rightly mentioned, we're going to discuss the tax reform as it affects the real estate sector. All right, this is what I have in my bucket. We'll bring an introduction, talk about real estate investment scheme, because you cannot talk about real estate without talking about real estate investment scheme. Then we go next to the tax reform proper, and then we move to withholding tax. We only focus on individual withholding tax deduction because that is the new tax act affects withholding tax deduction relating to individual. Then we go to offenses and fines. Then we just wrap it up as fast as possible. For the tax reforms, we're going to look at the taxpayers ID, look at companies, deductions, VAT, stamp duty, and VAT. These topics we are going to discuss in this tax reform. I mean, this what we're going to discuss in the tax reform in my agenda is something that should be a topic on its own. So we'll try as much as possible to bring the key issues to your notice. So please, I want to enjoin us to be participatory. If you have any expectation, please you can drop it in the comment section. It will be brought to my notice so that I can address it as I progress in this presentation. So once again, thank you for joining this call. By way of introduction, reforms are both positive and negative, thereby creating uncertainties. But one thing is certain, which is tax. All right. The real estate is also experiencing some forms of reforms. And so we're going to look at this tax reform through the lens of real estate sector. However, we're going to touch on other issues that affect everybody, like the tax ID. So please stay tuned. Or a real estate investment scheme. This is a scheme that is operated by a real estate investment company. That's the abbreviation for REIC. REIC means Real Estate Investment Company. These are companies that are approved by SEC to operate the scheme. The activities involves investing in income-generating real estate assets or real estate-related assets. They are required by law to distribute 75% of this income, that is dividend and rentals, within 12 months after the end of their financial year. So if their financial year is December 2024, they must distribute at least 75% of that income by December 2025. That is the condition for them to claim that deduction as an expense. Otherwise, all the income they earn becomes taxable. All right. However, any income they distribute to their shareholders will suffer withholding tax. And please, if you get any clarification on this, you can mention in the comment section so that I can speak on it further. All right, I go to the tax ID. This is one of the topics that is causing a lot of controversies. I've had people send voice notes, messages asking. I heard that by 1st January, I will not be able to access my account again because I don't have a tax ID. So we're going to discuss that here. And also have people talking that, oh, they've heard Mr. Taiwo saying they will deduct, they can debit your bank accounts for tax. We're going to discuss that under this tax ID. So please stay tuned. Tax ID, who are the issuers? The issuers are relevant tax authority. What I mean by relevant tax authority, that is the NRS, CTs, or FRS, anyone that you are familiar with. Then the state tax authority or the Federal Capital Territory Internal Revenue Service. These are the authorized people to issue tax ID. And this tax ID is similar to our BVN, all right? Currently, we have multiplicity of tax ID. If you are in Lagos now, as I am residing in Lagos, I have a tax ID with Lagos State Internal Revenue Service. If for any reason I'm transferred to Abuja, I will have to get another tax ID. So the new tax act wants to stop that. If you have one tax ID, it should suffice for you to perform your tax obligation in any parts of the federation to any state tax authority. All right. So if I am in Lagos now, by the time this tax ID comes on board, and I'm given a tax ID by Lagos State Internal Revenue Service, if I'm transferred to Abuja, I can still use that tax ID. Just like when we issued our BVN, okay? Take for instance, you have an account with the First Bank, you supply your biometrics and they issue BVN. You also have account with Zenith Bank. You can use that BVN that you obtain from First Bank. You don't need to go and capture another biometrics to update your accounts in First Bank. So that is how this tax ID will work. So there's going to be a central pool that all the relevant tax authority can have access to. All right. So what about eligibility? Every taxable person is eligible, both residents and non-residents. And the only person that is exempted are non-residents that are just earning maybe passive income by way of maybe dividend or interest. And what's the purpose of this tax ID? This tax ID is to enhance compliance. What about compliance? All your tax issue, you have to use this tax ID. Every tax matter requires that you use what? To use this tax ID. Every communication about tax, you have to use this tax ID. The next very important purpose of this tax ID is for contract purpose. If you don't have this tax ID, you will not be awarded any contract. In fact, if anybody awards you contract without a tax ID, will pay a fine of 5 million naira. 5 million naira. I was having a discussion on this in a forum, and somebody said, if the contract is not up to 5 million naira, well, that is what the law says. And then another purpose of this tax ID is for transaction. Okay, you issue receipt to anybody, you must state your tax ID on that receipt, so that if the person needs to deduct the withholding tax depending on the transaction, they don't need to get back to you. They just use that tax ID, deduct, and then do what? And remains. And then very importantly is for financial service. Okay, so effective 2026, based on the new tax acts, you need a tax ID to operate your bank. Okay. However, as we speak, nobody has been issued tax ID. And when it is issued, I strongly believe that there will be enough room for people to comply before any enforcement. So it's not just your bank, your stockbroker, your insurance, all of them will require your tax ID. So it's important when this tax ID is ruled, I want to encourage each and every one of us to please enroll, because it's going to be the game changer, and government is taking this very, very serious. And I believe you don't want to fall short of the law. All right, please, if I'm too fast, let me know. Or if there's anything that you want me to buttress on, please just draw my attention to it. I'll move to the next slide. And this is companies. Presently, we have 3 classes of companies, but effective 2026, all right, we'll have 2 types of companies. Okay, please, before I go further on this company, somebody asked a question here. At which time is the tax ID issued to corporate organization? Okay, let me address this, also very important. I observed that people that issue, if anybody register for with CSC currently, by the time you are printing your CSC certificate, you can also generate TIN. Okay, but that TIN does not mean that you have registered for tax. It's only the tax authority that can issue you tax ID. Okay, so tax ID has not been issued to anybody yet. When it is issued, it is communicated to everybody. Well, and for corporate organization, I learned that they're going to use your RC number. For business enterprise, they're going to use your business name, and for individual, they are going to use your name. All right. Okay, so let me go to the company. As mentioned earlier, there were 3 classes of company now, medium, small, medium, and large. The small are exempted. They don't have to file their returns. The medium, whatever tax they are liable, they pay only 20% of it. I mean, whatever is their taxable profit, they only pay 20% of it. For the last taxpayer, they pay 30%. But effective 2026, with the new tax act, we only have 2 classes of what, or 2 categories of companies. That is the small and other companies. The small company will pay tax at 0%. All right. In the next slide, I will explain this small company better. But for the large other companies, they are going to pay tax at 30%. But however, there's a provision in the law that this 30% tax can be reduced to 25% on the advice of the National Economic Council to the president. So that is that about company as it is now and what it will be come 2026 when the new tax acts come to effect. All right, we'll move next. Like I mentioned earlier, I want to talk about small companies. All right. So small companies, as it is now, their turnover threshold is 25 million naira. All right. But effective 2026, it will now be what? 100 million naira. What does mean that if the turnover of a company, please note this is for company and not for business name. All right. Business name do not qualify for this special consideration. Hello. If you have a business name, you do not qualify for what? For this special consideration. This consideration is for companies that are registered what? As a limited liability company. So currently, if a small company's turnover is 25 billion, that company is totally exempted from tax. For the effective 2026, when the new tax act comes to effect, it will now become 100 million. So a company that has 100 million revenue will not pay tax. Not pay tax in the sense that their tax rate is 0%. This 0% means the small company will have to file their returns. But when they file their return, they multiply by what? By 0%. So 1 million times 0 becomes what? 0. All right. And this small company don't need to get any special auditor. They can just prepare their financial statement themselves and attest to the correctness of the financial statement and file with the tax authority. Then another very important thing for a company to qualify as a small company, their asset must be less than 250 million naira. That means their fixed asset must be less than 250 million naira. Anything in excess of 250 million naira, even though their turnover is 25 million or 100 million as it will become, they will not be eligible as, they will not be classified as what? As a small company. All right, somebody is asking, what about clubs and association? Every taxable person will be given ID. But for those association, cooperative, those ones are totally exempted from tax, okay? Irrespective of their income, because they are not established for profit purpose. NGO, cooperative, they are not established for profit purpose. These companies, their primary objective is for profit. That is why they are enjoying this special consideration. Okay, NGO, cooperative, they are exempted from tax totally. Exemption. Okay, and then let me go to VAT. I'll come back to professional service. Also, they are not required to file VAT return, but if they choose to file, no problem, all well and good. Then, if they dispose their assets or they cease business, whatever income they get from disposal of assets or cessation of business, that will not form part of their turnover. So take for instance, their turnover is 80 million and they dispose an asset worth 30 million naira. Of course, if you add that, it will be 110 million naira. That 30 million naira will not be considered as a turnover in determining whether the company is small or not. Then, okay, I move up now to professional service. All right, please, I want you to pay attention to professional service. A small company, professional service, whether the turnover is 5 million or 100 million, cannot enjoy this exemption that small companies enjoy. Okay, what do you mean by professional service? Professional service are service that require special skill, service that are regulated, just like my accounting service or real estate service like Udoh and Co. Their service award do not enjoy this special consideration for small companies. Even if their turnover is 50 million naira, they will be taxed accordingly and they will not enjoy this exemption. And then this issue of controversy, the Nigeria Tax Act mentioned 50% for small companies, while the Nigerian Tax Administration Act mentioned 100 million. Please, I want us to stick with the 100 million naira exemption. We have heard from the tax authorities that 100 million naira is the exemption. All right, I'll move to the next item, which is deduction. All right, there are several deductions that are new, but these three stands out. So I feel I should bring it to your notice. One is the loss relating to capital. Currently, if you dispose, say, an asset that you bought, say, 10 million, okay, and you now sell it for 8 million naira. That means you have made a loss of what? 2 million naira. Currently, such loss will not be deductible because it is seen as what? As capital expenditure. Okay? But effective 2026 with the new tax act, such deduction will be allowed. Okay? And then personal expenses. Personal expenses are also not allowed. But personal expenses relating to assistive aid for the blind, for the disabled, and for those having hearing problem will be allowable effective 2026 when the new tax act comes to effect. And another very important allowable deduction is the operational expenses. As it is now, operational expenses are not allowed allowable deduction. But effective 2026, it becomes allowable. Not just allowable for, say, 1 year before the business comes to operation. As far back as 6 years, it will be what? An allowable deduction. Okay, somebody asked a question here. He said, how about real estate company managing agriculture? All right, these are separate business. Real estate company, the objective is different. Agricultural company, their objective is different. Agricultural company will be treated differently. All right, they have their own special exemption. While real estate company are separate, separate entities, so they are not together. All right, except I didn't get answer your question very well. Please, you can draw my attention to this. Quickly, I want to move to the next on my slide, which is VAT, expenses without VAT. Effective 2026, any expenses that you incur, all right, maybe somebody brings an invoice and you pay the person for the service that they render to you. But when the person issued that invoice, the person did not include VAT. Effective 2026 with the new tax act, that expense will not be an allowable deduction. Or maybe you import something into Nigeria and you refuse or fail to pay import duty or import levy. That's the cost of that import will not be allowable deduction. But presently, that is not really a consideration. So I want you to pay attention to this. Very, very important. All right. So, very, very important. So if anybody is issuing any invoice and the person did not include VAT, please tell the person to include VAT. All right. Because when you pay the VAT, you can claim any VAT that you have paid. Okay. I'll still talk about how you can claim your VAT. The new tax law, you will not even bear any tax. Any business to business VAT paid will not be borne by the business. Total free from bearing any VAT expense. So it is important that any invoice you receive, make sure that what there is VAT. Otherwise, that invoice will not be what an allowable deduction. Or anybody that is processing your imports for you, make sure they pay the import duty and the import levy. Otherwise, that expense that you incur will not be an allowable deduction. All right. And this also may be used or will be used by the tax authority to test if your expense is what is complete or not. Take for instance, your total expense is 100 million naira, and your input VAT that you are claiming is 6 million naira. If you gross up 6 million naira, it will not give you 100 million naira, except maybe there are zero-rated item that you bought, or maybe exempted item. Okay, but if your input VAT, maybe all the expenses you incur, they are taxable, and the input VAT you claim is 7.5 million naira, grossing 7.5 million naira will give you what? 100 million naira. So the tax authority can just do a quick check and say, oh, this man's expenses or this company expenses, they can be allowed because why? They have suffered, they have complied in accordance with the law. So please, effective 2026, you need to take notes of this. The next is capital allowance. All right. The new tax law provide for capital allowance on a straight line method. For assets like a building is 10%, for equipment and machinery, 20%, and for motor vehicle, 25%. This is based on what? Their expected economic life. However, some allowances that are being enjoyed now will no longer be enjoyed again. Allowances like investment allowance that we enjoy on plants and equipment, initial allowance that you claim, some you claim 50%, some 25% or 15% as the case may be, that is no longer applicable in the new tax law. Or maybe balancing adjustment like a balancing allowance and balancing charge, that is no longer available in the new tax act. All right, quickly I move to the next item. This is also very, very important, very, very important. Okay. Currently, we have a capital gain tax act that's responsible for charging capital gains. Okay, so if somebody dispose any asset, take for instance, I still make example with a building. I'll still do this example proper. If you dispose a building and you make profit, that profit is not income. All right, it's charged as gain, and the gain and the rate is what? Is 10%. Okay, but that will change effective 2026 when the new tax acts come to effect. Oh, somebody said I should recap capital allowance. Okay, please permit me, let me just go and recap, please. All right. Capital allowance effective 2026 with the new tax act is going to be on straight line method. There are three classes of rates: 10%, 20%, and 25%. So asset like building will enjoy 10%. That means you can claim capital allowance for 10 years for building. That has not changed. What has changed is that before, as it is now, you can claim initial allowance of 15% and then 10% for the remainder. But effective 2026, you cannot claim initial allowance for building again. You can only claim 10% every year straight. Okay, and for motor vehicle, as it is currently, you can claim 50% initial allowance, okay, and then 25% for the remaining 4 years. For effective 2026, you cannot claim initial allowance again. You can only claim straight capital allowance of what? 25% on motor vehicle. I hope that is clear. But if you need me to speak on it again, let me speak. And also mention that investment allowance on plant and equipment are no longer available in the new tax act. Okay. And there's no balancing allowance or balancing adjustment. Why is it that there's no balancing allowance or balancing adjustment? This is because, like I mentioned earlier, if you make any loss that may result into a balancing allowance, you can claim it, okay, as a loss. Or you make profits, you can add it as what? As your taxable income, which I'm going to discuss in under chargeable gains. Okay, so as I was talking about chargeable gains, Chargeable gain is concerned with assets, not what your day-to-day operations. Okay, a company is established to do buying and selling, okay, and they make profit. But if that company decide to dispose, take for instance, their vehicle, okay, any profit they make from disposing that vehicle will become a chargeable gain. Will become a chargeable gain. So what does that mean? Okay. Someone is asking a question. Choose identifiable assets for 20 in the straight line, sir. Okay, 20% will fall under like your plant and equipment. Okay, those are what you charge 20%. But if you need detail, we can provide you detail of all the taxes. Asset that you can charge 20%. Okay, you can drop your email on the comment section. We'll send you the detail. Okay, let me go straight to the capital gains, chargeable gains. Okay, so if you dispose your vehicle and you make profits of whatever gain you make, that gain will be charged at 10% and not at 30%. Take for instance, if it's a company. All right, so but effective 2026, that has changed. Okay, you remember when I was discussing about company, I said we have other companies and their rate is 30%, but there is a provision in the law that it can be reduced to 25%. This also will affect chargeable gains. Okay, so let me use an example to explain what I'm talking about. All right, take for instance, a company bought a building for 100 million naira. And over the years, they've claimed capital allowance of 60 million naira. So what is the balance will be worth 40 million naira. Okay, and they decide to sell that building they bought many years ago for 150 million naira. As it is today, they will pay 5 million naira tax. All right, but effective 2026, that has changed. How do they compute their gains? The gains will be 150 million naira less 100 million naira. And then we'll make a profit of what? 50 million naira. And that 50 million naira will be taxed at 10%, resulting to what? 5 million naira capital gains tax. But with the new tax law, all right, the method of computation has changed. The deduction will not be profit less cost. It will be profit less tax written down value. So it will now be 150 million naira less 40 million naira. And you have a gain of what? 110 million naira. That 110 million naira will now be taxed at 30%, resulting to what? 33 million naira tax. But if and when the rate is revised to 25%, then that will change also. All right, so it will result to what? 27.5 million naira. We have some questions here. Let me look at it. All right, so just the email, we'll forward it to you. All right, moving on to VAT. There are a lot of updates and amendments and changes in the VAT. But more importantly is the input VAT. Currently, for you to claim an input VAT, you must satisfy the tax authority that you use that input VAT in whatever taxable supply that you have made. Okay, so if that input VAT you suffered is not directly linked to your taxable supply, it will not be liable as a deduction. I beg your pardon. So, take for instance, somebody provided you with a service and you're a manufacturing company, okay? That service cannot be linked to the goods that you produce, so you cannot claim input VAT. But when you buy raw material and you pay input VAT on that raw material that you bought, you can claim that input VAT. But that has changed totally effective 2026. Like I mentioned earlier, a company will not even bear any tax burden come 2026. okay, because of the changes. So what are the changes? Now, if a company suffer input VAT on assets, goods, and service, they can claim that input VAT as far for up to 5 years. So take for instance, they suffer the input VAT 2026, they can claim that input VAT up to what 2031. Okay, for a 5-year period, they can claim that input VAT. But on this proviso that their supply is what is taxable. Taxable in the sense that it's either at 0% or 7.5%. But if their supply is not taxable, they cannot claim inputs VAT. All right, I'll move to the next and also very important topic, issue relating to VAT. That is VAT refund. Currently, the provisions or the guidelines for refund does not differentiate between okay, it does not differentiate between parts and other types of taxes for refund. Any type of tax as it is currently gets the same treatment. But with the new tax act, a lot has changed. Okay, and the change is relates only to what? To VAT. But let me just update you on what is obtainable now. And that is also obtainable for other types of taxes except VAT. What is obtainable now is that if you have any legitimate claim for VAT, you apply to the tax authority and they review your claim. If it is has merit, they advise the management after audit. 90 days after the management have made their decision to make that refund, that is when you can now get your refund. So take for instance, management decide on the 1st of October to refund you, you have to wait between that 1st to 30th. Any day between 1st of October to 30th of December, that is when you can now get your refund. That is what? A 90 days period. But that has changed only for VAT with the new tax act. With the new tax act, VAT refund is within 30 days. If you have a valid request for VAT and you submit your request with your evidence to the tax authority, within 30 days, they will do what? They will process your refund and refund you whatever VAT that you have suffered. And the validity period is for 12 months. So if you request to, send the request to the tax authority on the 1st of November, by 30th of November, they should pay you and refund you your VAT that you have suffered. That is a 30 days period. And for the validity period, if you the transaction took place, for instance, December 2025, okay, you have up till November 2026 to make that claim. After November 2026, okay, you cannot make claim again related to VAT refund. And they also understand because of the short period, some people may want to abuse that refund, okay? There is a penalty for that. Anyone that claims VAT refund falsely, the penalty is 100% of that amount that was falsely claimed. So if the amount is 100 million naira, the penalty is additional 100 million naira. So you have to pay 200 million naira. Apart from that, you also pay interest on that amount that you have claimed. All right, I hope that is clear. Move next to the slide. Stamp duty. All right, a lot has changed also relating to stamp duty, but because we are talking about the real estate, so I just limited issues that affect real estate. Okay, so I'm going to discuss stamp duty as it affects lease, mortgage, and transfer. Okay, effective 2026, any lease, mortgage, or transfer that is less than 10 million naira or 10 times annual minimum wage are exempted from stamp duty. Okay, any mortgage, lease, or transfer that is less than 10 million naira are exempted from stamp duty. Okay, or 10 times annual minimum wage, whichever is higher. All right. However, for the rates of mortgage and transfer, the rate has not changed. For mortgage, it is 0.375%. For transfer, it's still 1.5%. But for lease, currently, we have three levels of rates. 0 to 7 years is 0.7%, 78%. 7 years to 21 years is 3%. Above 21 years is 6%. But with the new tax act, it's just two brackets. That is 0 to 7 years and above 7 years. So any lease that is 7 years, the rate is 0.78%. And any lease that is above 7 years, the lease is 3%. That is effective 2026. And I'll go to the next on my slide, which is stamp duty. All right. This new tax acts specify who is liable, unlike what is currently available. Sometimes there are arguments. Oh, who is liable to pay the stamp duty? The new tax act states clearly who is liable. All right. For a lease, it is the lessee. For a payment, is the payee. For a transfer, is the transferee. For a mortgage, is the mortgagee. For a service, is the beneficiary of the service. For any security, is the party taking the security. For borrowers to lender, it's different. I'll explain this. For somebody borrowing, take for instance, you go to a bank and you get a loan from the bank. You are the borrower, so you have to pay stamp duty. But where a capital is converted to a loan, it is the lender that converted the capital to loan that is liable to pay stamp duty. And for policy like insurance policy, it is the holder of the policy that is liable to pay stamp duty. All right. Next on our slide is withholding tax. Like I said, withholding tax is withholding tax for individual and it's withholding tax for companies. But the new tax act provision did not really affect the withholding tax for individual. It only affects withholding tax for, did not affect withholding tax for company. It only affects withholding tax for individual. And not all, only compensation for loss of employment. Compensation for loss of employment, this 10% rate here is based on the Capital Gains Tax Act. And effective 2026, the new tax law has repealed the Capital Gains Tax Act. So that Capital Gains Tax Act is no longer a law. So this 10% on compensation for loss will no longer apply. All right, so what will be the likely outcome for individuals that have compensation for loss of employment? Let's check out in our next slide. All right, for somebody that is compensated for loss of employment, this is likely what is going to happen effective 2026. Okay, anyone that gets employment that is less than 50 million naira, such a person will not suffer any additional tax. All right, because 50 million naira is exempted for compensation for loss of employment. Okay, but any amount that is in excess of it becomes taxable. All right, and the tax will be what? Payee or personal income tax as it were, based on this rate. First bracket, 800,000 naira is 0%. The next 2.2 is 15%. Next 9 million, 18%. Next 30 million, 21%. Next 25 million, 23%. And above 50 million is 25%. So what does this mean? Okay, if somebody is paid 50 million, like I said, that 50 million naira is exempted. What if the person is paid, let's say 50 million, 800,000 naira? Okay, that 800,000 naira is taxable, but the rate is 0. So the person will not pay additional tax. But if the person say they paid the person 52 million naira, okay, 50 million naira is exempted. Out of 2 million naira, 800,000 is what? Is 0%. Then the remaining 1.2 million naira will be taxed at what? At 15%. So that is likely what's going to happen effective 2026. Then, who or when does obligation to deduct arise? It's important we take note of this based on the new regulation, because usually there are arguments, oh, I have not paid, oh, I have not settled, why should I deduct? No, the law has made this clear now. Okay, if the party are not related, okay, they are unrelated. When payment is made, you have obligation to what? To deduct. Or when settlement is made, maybe it is a net off. The person is owe you and you are owing the person, so there's no payment, you have net off. When that net off takes place, or any form of settlement, you have an obligation to do what? To deduct withholding tax at the appropriate rate. But where the parties are related, the obligation to deduct arises when payment is made or liability is recognized. Okay? When payment is made or liability is recognized, when the party awards are related. And also there's a fine for failure to deduct. The fine is what? 40% of the amount that you failed to deduct, including what? Interest at CBN rates. All right. I move to the next deduction are exempted. Any transaction that across the counter, telephone charges, internet data, airline tickets, out-of-pocket expenses, and LPG, CNG, PMS, HGO, LPFO, DPKH, A1 awards are exempted from withhold tax deduction. Next on my slide is small company. All right, like I mentioned earlier, small companies are exempted currently, and with the new tax act, they are going to pay zero tax. Okay, that means that they are not going to pay tax invariably. Okay, but when a small company does not have a valid TIN, anybody making payment to such small company have an obligation to deduct. So remember when I mentioned one of the purpose of your tax ID is for transaction. So if you are like a small company and you're transacting with others, you must state your TIN in your transaction with other people. If you do not state your TIN and they cannot confirm that your TIN is valid, they have an obligation to deduct, even though they should not deduct. Okay? And then if you're a small company and your transaction is more than equal to 2 million naira, anybody that is paying you have an obligation to deduct withholding tax at the appropriate rate. However, this may change effective 2026. The 2 million naira is based on the 25 million naira threshold. Okay, but 2026, like we have learned, the threshold for small company turnover is no longer 25 million, it is 100 million naira. So this threshold will change because 2 million naira, okay, is too small. All right. So how do they arrive at this 2 million naira that they say we should deduct? They expected that, okay, maybe the small company has 12 transactions. 12 transactions by 12 million naira, by 2 million naira will give what? Result to 24 million naira. At 24 million naira turnover, it's expected that the small company is exiting the treasury of a small company. So you should start what? Preparing to pay tax. But that has changed. That will change effective 2026. So this amount is likely going to be amended in the withholding tax regulation. All right, offenses and fines. Okay, there are a lot of offenses and fines. In fact, there are about 50 of them. But for purpose of time and the sector we are dealing with, we just narrow it down to these 6. However, I mentioned some fines relating to withholding tax failure to deduct. The fine is 40%, and for value-added tax false refund claim, the fine is what 100% of the amount falsely claimed, and together with interest at CBN rates. Okay. Other offense are what? Offense regarding to registration, offense regarding to non-disclosure of facts in the table instrument, offense relating to stamp duty fraud, offense to return filing, offense on counterfeit document, and general offense. I'd like to dwell on this registration and return filing. I'd like to dwell on registration and return filing. Okay, I observed that for companies that are registered recently, while printing your CSC certificate, you can get your TIN, but that does not mean that you have registered for tax. You need to approach the tax authority and register for tax appropriately. Otherwise, you have not registered for tax. And the offense is 50,000 naira for first month, 25,000 naira subsequent month. And anybody that award contract to any individual or company that is not registered for tax, the fine is 5 million naira. Okay. The next fine, offense I want to talk about is return filing. Return file is not just that you fail to file, or maybe the tax authority requests that you file and you refuse to file. If you file incomplete return, it is still classified as what? As incomplete filing. Or if you file inaccurate return, it will still be classified as what? As return filing. So it's important you file complete and you file what? Accurately. Okay, somebody is asking, what do you mean by invalid TIN? Okay, invalid thing is this. Like I mentioned earlier, registration, I register with CAC now. And while printing my CAC certificate, I can generate my TIN. But that TIN is not registered for tax. So if you go to the tax authority and want to make any transaction on that TIN, that transaction cannot be processed in the it's not in the database of the tax authority. So that TIN is invalid. Okay? Before now, before the tax promise come to effect, there was no platform for the Federal Inland Revenue Service where people can file their return. Okay, there are people that have TIN, but they have not validated it with the tax authority. They've not registered it with tax promax. So nobody can process transaction relating to such thing. Okay, so if deduction is made from such a person, they cannot process that deduction. Okay, it's just like maybe somebody has an account and the person has not used that account for many years. That account becomes dormant. Okay, so the tax authority have not recognized that ID. That is an invalid ID. An ID that has not been validated with the tax authority. That's what I mean by what? An invalid ID. Yes, somebody is asking, would a sole proprietor be issued a tax ID that is different from the business? Well, for purpose of payee return, yes, a sole proprietor will be issued a tax ID that is different from a business ID. However, for a business ID, like a business name, the tax will be charged in the name of the sole proprietor. But if they are partners, it will be taxed in the what? In the tax ID of the partners. Okay, so sole proprietor has the tax ID and the business name has the tax ID. The tax ID of the business is for compliance. They want to pay withholding tax, or they want to pay payee of their employees. But when it comes to income tax, the income of the business will be taxed in the ID of what? Of the sole proprietor. This sole proprietor is not for company. This proprietorship is for business name. All right. Next question is that if two companies are involved, all right, somebody is asking a question here. If two companies are involved in a business transaction and there is an agreement to share the fees and fund, and the fund was paid to one of the company's bank accounts, can the company be paid to charge withdrawing tax on the second company? All right. All right. All right. Okay, so the other company will enjoy that benefit. Okay. Withholding tax in advance payments, if it's a share of profits, it might not really be because that income has already been taxed. Okay, that income arrived, not really, because the whole amount has already been taxed by the person that makes the payment. If you now deduct withholding tax while sharing the fund, I think that will be amount to what? To double taxation. Okay, that will be amount to double taxation, in my opinion. Okay. Okay, what do you do if a client deducts withholding tax and refuses to remit to relevant authority? Okay, please, you have to report to the relevant authority with your evidence that this is the supply I made to this taxpayer. The amount is 100 million naira, and this taxpayer deducted 5%, paid me 95 million naira, yet I did not get credit notes for the 5 million naira that was deducted. You inform the relevant tax authority and they will enforce the clients to remit that fund. The client will not just remit that fund, the client will pay penalty for failure to remit that fund. All right. So for the offense and fines, I was talking about returns and filing. So returns and filing include failure to file, refusal to file, filing incomplete return, or filing inaccurate return. For general provisions, the fine is 1 million naira, and on conviction, 3 years or 1 million naira
Thank you so much.
Over to you, would you please?
Yeah, thank you so much, Mr. Christopher SN Udoh. Thank you for making tax look so easy, and thank you for breaking it down to our understanding. I know we have a lot of people online, so I have some questions too on ERQ. So I just want to give room to anyone who wants to make contribution. Maybe you want to say something to us, or you want to ask question, any clarification. I know it has been simplified, but I believe that most of us on this call, or let me say some of us, are not accountants. So there are still some words like capital gain tax, deduction. You are wondering, what are they talking about? I just want to know the tax that I will pay. So please, if we have such people, and you please kindly raise up your hand virtually so that we can allow you to talk. Yes. Let me look at the Q&A session. I think we have some questions that has not been addressed. The last one, right? Let me see. Somebody asked, in joint venture, is that the last question? Let me see. Yes. In joint venture transactions, Where a landowner brings land and the developer builds, is VAT now expected on the developer's share of units? If yes, how will VAT refunds or credit be handled to avoid cash flow problem? Mr. Chris, did you see that question on E&Q session? Unmute, please. Unmute your audio. I think he's still. Mr. Chris, please unmute.
I've done that, sorry. Yeah. I'll try to check the question.
Yes, move towards the last place in joint venture. Yes. Or let me read the question again. In joint venture transactions, where a landlord brings land and a developer builds, is VAT now expected on the developer's share of the unit? If yes, how will VAT refunds or credit be handled to avoid cash flow problems?
Okay, if I get you right, guys, this involves sales of property, isn't it?
No, yes, joint venture is a situation where someone brings their land or their property and then they hand it over to a developer to develop it, to build it.
Okay, any transaction relating to land is exempted from VAT. Are you with me? So transaction related to land is exempted from VAT. But if there is a VAT transaction, okay, like I said earlier, with the new tax act, the business will not even bear any tax. Okay, the business will not bear any tax. Whatever tax that they have suffered, they will deduct from whatever they are receiving. Okay, if it involves taxable supply, that VAT will not be part of what they will share to the owner. All right, VAT is not their money. VAT is government money. Okay, VAT is not what's supposed to be shared. All right, and I believe the other person is not even reporting the income for VAT. When they are going to report the income for VAT, then likely they might share. Okay, all right.
Thank you very much. We have another question. It says, if rent is paid to an individual account, not company's account, should withholding tax be deducted?
Come again, if what?
If rent is paid to an individual account, not company's account, should withholding tax be deducted?
Yes, ma'am. Withholding tax is not just for company only. Withholding tax for individual. Whether company or individual, the rate is 10%.
Okay, thank you so much. I have not seen any other question or anyone raising up their hands, but let me ask this question. I think about 2 people have asked me this question. Okay, 2 people raised their hand. Don't worry, I will attend to you. But before that, let me just ask this question. You know, there's some video going up and down on the social media, and the social media is telling people that, oh, if you are a business name, quickly go and convert to company so that you can have some exemption. What can you say to that?
Oh, I will ask them to throw that line. It's important because a business name, like I mentioned when somebody asked a question here, you'll be taxed as an individual, okay? You'll not be taxed as a company. So it will be based on the tax bracket, first 800,000 naira, 0%, 2.2 million naira, 15%, the next 18, and so on and so forth, up to 50, 25% for any amount above 50 million naira. So that is how profit from a business name will be taxed. That business name tax will be in the name of the owner, okay? But for a company, it will be in the name of the company. But if the company's turnover is less than 100 million, that company will not pay any tax. But for a business name, even if your turnover is 50 million naira, you have to pay tax. All right. So it's important for anybody that has the capacity to do that, they should do that. But however, not all service that can move from business name to company. In fact, even if you move, that exemption would not apply. What are those services? Professional services like Udoh. Udoh cannot register as a company. Okay, it has to be business name. Okay, and any accounting firm, no accounting firm can register as a company. It has to business name. All right, because it requires license to practice, it is regulated, and it requires professional skill. So this cannot enjoy the benefits of a small company. I wish to state that. Yeah.
Thank you so much. So let's allow Mr. Ibrahim Mwazu, yes, to speak or ask question or make his contribution, please. Mr.
Good
Ibrahim.
afternoon, everyone. Mr. Udoh, thank you very much
Thank you
for the
so much.
presentation. Yeah,
Thank
I
you.
just want to make a remark on that question that was asked. Yes, as you rightly said, the payment for the rent, the individual, and then for the corporate bodies. But however, I think now the payment of rent, the means of payment in the individual account is actually a means of payment. So it's more like a means of payment. So it doesn't matter once an individual or a company, the deductibility of withholding tax is actually applied. So it's whether the payment has been made to the individual bank account or cash, whatever it is. So the deductibility of withholding tax is mandatory based on whether if it is a corporate body or individual. That's what I wanted to also clarify on that. So the means
Thank you
of
so much.
payment is actually irrelevant once the established recipient is acknowledged in the transaction.
Yeah,
Thank
thank
you.
you so much, Martin. Yes, sir.
Yes. Yeah.
Okay, thank you very much. I can't see any other hand. We should be rounding up, but I have a question here. Someone said that the majority of Nigerian property transactions still happen informally. What new enforcement mechanism will you ensure for capital gain tax to ensure capital gain tax is collected, especially where the buyers and the sellers do not voluntarily disclose gain?
All right. Thank you so much, Muji. You see, I started with talking about tax ID. All right. When you have a tax ID, that transaction will certainly go through the bank. All right. And depending on the amount, the bank has obligation to inform the tax authority, either monthly or quarterly, of transactions in your account. Okay. So if such transaction take place, the tax authority will be informed and they will write to you asking you, please come and explain this inflow in your bank. Okay. So if you do not have tangible explanation, they will take it as what? As income and tax you. But that is not as simple as it is. Okay. They'll give you ample opportunity for you to explain how or what is the source of this income. It may not even be disposal of real estate. Okay. It might be just, oh, somebody made a transfer to you. Okay, somebody was owing you and refunded your money back. Of course, you don't pay tax for that refund. But if you earn an income, all right, your tax ID is going to be linked towards to your bank accounts, to your transaction with the tax authority. Take for instance, Lagos State now. My tax ID is with Lagos State. And my bank account is showing that I have inflows of billions. All right. And my gross income for the year is in millions. I have to tell them, explain the gap of the inflow in my bank accounts and my what and my total income. All right, because the tax ID will link everything with the bank account and with the tax authority. So there's no hiding place this time around. All right, but if I keep proper record of account, I say, oh, this 1 billion that came to my account is actually not my money. Okay, it's actually somebody's money. Oh, he asked me to do a particular project for him or her within the country. Okay. So that will not be an obligation on my part. So record keeping is very, very important in this era.
Thank you so much. We still have some questions. I think I omitted a question. Let me go back to it. It said, when a firm is paid fee and you pay out an amount as incentive to someone or some people who made the payment, how do you reflect this in your account to avoid tax deductions?
Okay, you paid an incentive.
Yes.
All right. Most likely that may not be a deduction. All right, because I believe you do not, like I mentioned earlier, any expense without VAT, most likely, will not be a liable deduction. All right, so that will not be a deduction.
Okay, thank you so much. So we are gradually coming to an end of this, but I think I still have one question there. Let me quickly check. Okay, so we have a question here saying that, how do we deal with an invoice where the person that raised the invoice said that the invoice is net of withholding tax?
Well, that will be just a business arrangement. Okay, somebody can also issue invoice without VAT. That is a business arrangement, but that will not supersede the law. All right, and then that will not even happen with this new tax law. The reason why people will say net of withholding tax is because they don't have a valid thing, all right, and they want to escape tax. That's most likely the reason. Because when you deduct withholding tax, it is an advance payment of their income tax. So it's to their benefit. And if they have any reason that, oh, what you deducted is more than my income tax, they can claim for refund. So with the new tax act, that may not really be common again or applicable, because every tax ID must be valid.
So we have another person raise their hand of Badebo Salawu. Sorry. Please, can you your contribution?
Good afternoon, my professional colleagues. Mine is I just want to support what Mr. Udoh has been trying to explain. When you have an invoice that is telling you net of withholding tax, they are transferring the responsibility to the person. So if you have such cases, it means you are going to be responsible for that withholding tax or VAT to be paid to the relevant revenue tax authority. So it's a business transaction according to Mr. Udoh, but it's not known to the law. So in any situation you find yourself in that kind of situation, it means you have to make sure that you are the one to bear the responsibility. That is it, because it is not known to the law. So thank you. Mine is a contribution. God bless you.
Thank you so much, Mr. Badebo.
God bless you.
Thank you so much. Mr. Ibrahim, are you still raising up your hand? Do you still have another contribution?
Maybe just a clarification. Yes, payment can be gross and then the net of it. But depending on the agreement, just like the speaker said, the payment is when in the agreement they say this payment is net of tax. Then definitely down the recipient is receiving the payment exclusive of the tax. So perhaps the suppliers must have deducted their amount. But then in that case, we have to also look at what the agreement states or the terms of it. Who is responsible? If they just say the payment is, then definitely supplier is expected to deduct it based on the explicit provisions of the law. But if in the subsequent paragraph that they make it very clear that the tax, who is going to be responsible in the tax, the recipient, then that's clearly. But if they say the net payment of it, then the responsibility is still lies on the supplier to deduct and then pay the relevant withholding tax. Thank you very much.
Mr. Ibrahim. So the last question before we go, this question says, if I have an inflow from another country to my account, will it be subjected to income tax?
Come again.
if I have an inflow from another country into my account, will it be subjected to income tax?
Not exactly. Okay. So what is this income? What is this inflow? Is it an income to you? If it's an income to you, it's taxable. But if it's not taxable. And also, when we talk about income, foreign income, if that income comes through approved channel, they are actually what? Exempted income. So you need to disclose that properly and declare what is the income about, what is the inflow about, for them to know how to tax it or exempt it.
Thank you so much. That is why you have also told us that we should keep proper record of every inflow and maybe outflow from our accounts. Before you go, can you just take a minute to just wrap up? Like, say something to us, encourage us as Nigerians, because some of us don't know, we don't have reason to pay tax. Like, we don't understand the reason. So we need a word of encouragement before you go.
All right, before I do that, there's a question here talking about across the counter transaction.
Oh, okay.
The person say we should just speak to it a little. What about across the counter transaction? Means sir? Okay, so across the counter transaction means you go to let me give an example. I go to a company that sells printer, all right? And I buy printer from them, paid it off, and I take the printer to my house, all right? That transaction will not be what is across the counter transaction. Just like you go to a pharmacy store, you hear them say across the counter drugs, some drugs are not across the counter. Okay, so I go to a store that sells printer and I buy the printer and I take it to my office, that will not be taxable. But if I send a request to that same company, telling them, please supply me 1, 2, 3 printer, all right? And when you supply, let me know the price and I will pay you. That is no longer across the counter transaction. That transaction becomes taxable. You still printer that I bought, but the process, the procedure is different. So that is what across the counter is all about. All right, so my parting word will be this. Please, it's not different from my conclusion. Seek more knowledge as possible. This new tax law has provided so many exemptions. So please try and listen to a lot of webinars so that you're able to know how to take advantage of these new provisions of the tax law. Please, there are so many exemptions. So I want to encourage us, if you have any opportunity for any tax webinar, please just log in. And the tax law is simplified also. You can also take time and read it. If you have any question, there are people around you that can explain. I'm also available. I can share my email. Please can share my email. If anybody has any question, can also send it to me via email. I'll be very glad to respond. Also, it's important we keep record because the tax authority can come to you after 6 years to ask you to explain the transaction. If you did not keep proper record, no way that you remember what transpired in the transaction, and you will just be overburdening yourself. So keeping record and joining as much webinar as possible relating to tax is what I will highly recommend. And so thank you so much, Moji. Thank you, Bosiele and Co, for this opportunity. And thank you, our participants, for making this webinar worthwhile. Thank you so much.
Thank you very much. Thank you to everyone. On behalf of Ubosele and Co, our team, our principal partners, associate partners, and all our team members, we just want to thank you for your time joining us. Some of you have been joining from January to this month. In fact, some of you started joining like 3 years ago. So we want to appreciate you for your time and for your patience and for your contribution. We thank Mr. Moazu and the other person that contributed. So we want to appreciate you. And for all the questions, people that ask questions, we say a big thank you to you. And so our speaker, I want to say I am a proud friend, you know. I'm not going to just go like that. It's my friend for 30 or more than 30 years. I'm proud. Even before the webinar, I know that you are going to deliver. So thank you so much. This webinar is making me say Mr. Christopher, but the number thing is you are my Calabar friend, and I appreciate you so much for this time, Chris. And to all of our participants, like I said, we want to appreciate your time and contribution. And from all of us, we want to wish you a Merry Christmas and Happy New Year in advance, because till January ending, before our webinar will come your way. So up to then, we say that be safe, and we pray that the good Lord will be with you. And also be intentional about paying tax so that we can have a better Nigeria. Thank you so much. Thank you. God bless you. Enjoy the rest of your day. So this meeting is brought to a close now. Thank you.